Hey guys, I'm loaded Forex, aka no signal, no entry. In today's video, I'm going to show you how to develop a well structured risk management plan, and I'm going to use three different traders for this practical illustration I'm about to show you in today's video. The first trader is Trader John, the second trader is Trader Mary, the third trader is Trader Peter, and I'm going to show you a well detailed information you need to combine a well-structured risk management plan plus a profitable trading strategy with edge in the market to make a lot of money. And these are the little mistakes that a lot of beginner traders are making out there. They don't understand how to combine a well-structured risk management plan plus a profitable trading strategy with edge in the market. I have the three stages of successful trading. First one is the losing stage, the second one is the motivational stage, while the third one is the profitability stage. And here with me, I have three different traders I'm going to use for this practical illustration. I'm going to use Trader John, Trader Mary, and Trader Peter. And each of these traders comes to the market with a trading account size of $500 each. I'm going to demonstrate and explain in detail the behavior of each of these traders. Let's talk about the Trader John. Trader John is a trader already at the losing stage, which is the first stage of successful trading. We all pass through this losing stage. You can't get to profitability stage if you did not pass through the losing stage. And this Trader John at the losing stage, a trader who comes to the market with zero knowledge, no profitability trading strategy with edge, and he lacks discipline, he lacks patience in the market. That is why he's losing. And this is the very significant stage whereby a lot of traders give up at the early stage of their trading career. Traders with low quality fighting spirit will definitely give up at this losing stage, because when you start losing money, your emotion might not be able to withstand this losing stage. And traders at this stage, they think like a gambler. They don't think like a trader. They don't treat trading as a business that is a long-term journey. You have to take it gradually, bit by bit. Master stage one, do your assignments before you get to stage two. They don't understand this process of successful trading. That's why they come to the market with $500 account and try to risk the whole $500 on a single trade. And whenever this trade goes against them, they lose interest in trading because they are risking the amount of money they cannot afford to lose in the market. Trader Mary is a trader who has passed through the losing stage. Unfortunately for her, she's able to skate through the losing stage, and she's already at the motivational stage right now, focusing on learning, getting a profitable trading strategy with edge in the market, and is trying to acquire a little bit of patience and discipline. Every trader at this stage can still give up in trading. If you don't have a well-structured risk management plan, discipline, and patience, you can still give up at this stage 2 of successful trading. The third stage is the profitability stage. At this stage, this is a trader who has passed through the losing stage, the motivational stage. He has witnessed both the losses and the profits in the market. He has gone through series of failures, trying again and again, fall and rise. He has learned a lot of lessons at the stage 1 and so much lesson at the stage 2 before he is able to get to profitability stage. This is how traders at the profitability stage of successful trading things. They view their trading as a business. They come to the market with a well-structured risk management plan, how much they are going to risk per trade and how much they are willing to let go overall in a day. And if the trade goes in their favor, they accept the fate and move on and learn from their winners. And if the trade goes south the other way around, they accept the outcome and they take responsibility and move on to the next opportunity. This trader at the profitability stage, they don't dwell on their mistakes. Whenever they lose money, they go back to the market and learn from their losses. They don't allow the losses to stop them from taking the next trade. But traders at the losing stage of successful trading, they dwell so much on their losses. They allow their losses to get into their head, whereby they will not be able to execute their next quality setup in the market. Same thing as the trader at the motivational stage. They also allow their losses to get into their head, and whenever they experience one or two losses in the market, they are afraid to execute their next trade. They don't believe in their strategy anymore. But when you get to the profitability stage, the experiences you have gotten through the stage 1 losing stage and stage 2 motivational stage will help you to manage your trading account and see trading in form of a long-term business plan. It's not a short-term business plan whereby you want to trade your $500 account to $1 million in a week or in a month. At this stage of profitability, traders focus on how to grow their accounts gradually. They respect the importance of proper risk management in the market. And in today's video, I'm going to show you a practical life example, losing stage of successful trading to motivational stage and finally to profitability stage. If you find value in today's video, don't forget to hit the like button, subscribe and turn on the notification button so that you can get notification when we upload another exclusive forex video tutorial like this. And if you want to be part of our free signals on Telegram, where we give out profitable signals every week to our trading community on Telegram, click the link below this video description and I will see you after the intro. Trader John at the losing stage. This is a trader at the first stage of successful trading, which is the losing stage. He doesn't have much knowledge about proper risk management. He trades like a gambler in the market. No well-structured profitability trading strategy with edge in the market. You just feel like, I need to enter this market right now. I need to enter this sell or buy opportunity right now without preparation, quality reasons why you should enter a trade or why you should not enter a trade. Trader John has $500 trading account. This is a trader who thinks like a gambler. Trader John can decide to risk the whole of the trading capital, which is $500, or at the same time he can risk half of the trading capital, which is $250. Now this is a trader with zero experience in the market. When this trader experiences the first loss, which is $250 out of the $500, number one, is going to be destabilized. He will be devastated, will lose his control, because out of the $500 trading capital, he has lost 50% of the trading capital already, which is $250. These are the mistakes that I made when I started trading as well. I started like a gambler without no direction in the market. And I'm going to show you why a lot of traders blow up their trading accounts quickly in the market. Now, this is a practical illustration to represent Trader John at the losing stage, how they react to their losses and how they react to their profits in the market. For instance, let's assume Trader John is taking a buy opportunity around this zone and he makes use of his long position to execute this trade so that he can take a possible buy opportunity at this point of interest. Fortunately, when he executes his trade, the trade is already moving in his favor, right? You see this kind of excitement in the face of this Trader John at the losing trade, because this is a trader with zero experience. Now, all of a sudden, this trade reversing against his entry position, right? This is a trader who is risking the whole of his trading capital, which is $500. Now, the moment this trade is trading against him, this trader will not want to accept that he is wrong on this trade. Instead of him to cut this trade or to get out of this trade, to cut his loss at the early stage so that he can minimize his loss on this trade. Instead of him to accept defeat here, he will keep on increasing his stop loss, hoping that the trade will later go back to his favor. He thinks like he's the one controlling the market. He's not considering other factors, that there are other millions of traders executing the same position or trading against his position in the market. So he will keep on increasing his stop loss. He will not accept the losses around this zone here until the trade is also moving towards his stop loss. Instead of him to accept again, he will keep on expanding or increasing his stop loss in the market until price finally wipe all his trading capital. This is how trader at the losing stage behaves in the market. They approach their trading like a gambler. No structure, strategy, no structure, risk management plan, no discipline, no patience. And the next example I'm going to show you is the behavior of trader at the motivational stage, how they react in the market, how they behave towards their losses in the market and towards their profit in the market as well. Trader at this stage of successful trading, which is motivational stage, now focus on learning first. They stop thinking about money at this stage, right? But they still lack a little bit of patience and discipline. This trader, whenever they want to enter the market, they calculate their risk management, but they still lack a little bit of discipline and patience. Trader Mary is trading with a capital of $500 in the market. This trader at the motivational stage is risking a sum of $100 out of the $500. If you subtract $100 from $500, she will be left with $400 in her trading account. Now, this trader executes a position around this zone, hoping that the trade is going to move in her favor to the upper side so that she can make a lot of money. But unfortunately, the trade hits her stop loss, right? But she's still maintaining her discipline. Then the next opportunity, she's trying to execute another position here. Don't forget, this is a trader with a trading capital of $500. She has taken her first trade and she took loss, right? So she's now left with $400 capital right now in her trading account. Now she's risking another $100 out of this $400. So she will be left with $300 in her trading account because she's risking $100 on this trade, and she's hoping that this trade will move in a direction. But one thing you have to understand is that you have no control over the market. You only have control over your strategy, when to execute, when to exit the market, and when to take your profit. And also you have control over your money, but you don't have control over the price action movement in the market. You cannot control the outcome of each trade, whether the trade is going to be a winner or a loser. You can't control that. That's why it's very important for you to focus on the factors that matters to your successful trading journey. This trader Mary executes a second trade here right now, hoping that she's going to win this trade again, and unfortunately she lost the second trade. Now she's trying to execute the third trade. This is where the problem comes in. Now she's now left with a trading capital of $300 out of the $500 initial trading capital. So she's down of about $200. This is where psychology comes to play. She will be contemplating whether to execute a third trade or not to execute a third trade, or she will be trying to recover all her losses overnight. whenever you are in a drawdown, that is when you should reduce your risk, or if you cannot withstand the losses, you take a break from the market. But this trader at the motivational stage will not want to take a break. She wants to recover all her money on a single trade. Now she's trying to execute another trade here around this zone here, and she's trying to risk $200 out of the $300 capital left. Number one, she has taken 2 losses consecutively out of the $500 now, and she's left with $300. On her third trade, instead of her to maintain the same $100, now she will increase her risk from $100 to $200. And look at what happened. Then the trade, unfortunately, goes against her. She has lost a whole of $400 out of this trading capital. She's now left with what? $100, and she will not want to accept the outcome of the trade, that she's responsible for every actions in the market, that she's responsible for her decision in the market. She took the trade by herself, and she broke her trading plan of maintaining the same risk on a trade. She has already planned herself at the beginning that she's only going to take 5 trades before she blew up her account. Right now, she has taken only 3 trades and she has lost $400 out of the trading capital. Now she's now left with $100 right now, due to lack of discipline and lack of patience in the market. At this stage, she will not want to observe, calm down, and be patient to take a quality trade in the market that can help her to recover her losses in the market. Right at this stage, she will just enter trade anyhow. This is how trader at the motivational stage behaves in the market. Motivational stage trader, they are a little bit better than the losing trader, because they are not trading like a gambler anymore, but they still lack a little bit of patience, poor discipline, and at some point in time they will break their trading rules or plan. The last one, which is the profitability stage. Every trader at the profitability stage has passed through the losing stage and the motivational stage. They have gotten a lot of trading experience. They have come to realize that before they can succeed in trading, they have to learn first, get a profitable trading strategy which edge in the market. They have to be a disciplined trader, and they have to acquire a lot of patience in the markets, and they also have to respect their trading capital by structuring a well risk management plan in the market. I'm going to show you the behavior of a profitable trader, how they react to their losses, how they acquire the right mindset to bounce back from their drop down and make much more profit after experiencing losing streak in the market. Trader Peter, who is a profitable trader, is trading account size of $500. Before Trader Peter, who is a profitable trader, will take any trade in the market, first thing, he will structure his trading capital, how to trade it, the number of trades he will need to take before he blow up his trading capital. First thing, if you go to this website called babypips.com, go to the position size calculator, and he's going to put his trading account balance here, which is $500. I'm probably risking 1% of his trading account, or probably 5% of the trading account, and put a stop loss depending on the setup he or she is taking. Let's assume Trader John is trying to execute a trade around this zone here, and is risking probably 30 pips to target 138 pips. That is about ratio 1:4 risk to reward. Now he's risking 30 pips on this trade, then he's going to calculate his trade. That means Trader Peter, who is the profitable trader, is only and ready to lose $25 on this trade. You can see the amount at risk here. Is risking only $25. Can you see the way a profitable trader approach their trading account. They see trading as a business. Imagine a trader who is only risking $25 out of $500 trading capital. There is no way this type of trader will blow his account. There is no way this type of trader is going to get wiped out of the market quickly, because you have enough breathing space to keep on trading until the odds are in his favor. It is normal to take losses. It is normal to lose 5 trades in a row. It is normal to lose 3 trades in a row. It's normal to lose 4 trades in a row. But the most important thing, he has acquired the habit or the quality trading skill that even if you take 3 losses in a row, all it takes to recover the 3 losses is just 1 trade or 2 trades in the market. So if you are targeting ratio 1 to 2 and you are risking $25 per trade, even if you take 3 losses, that is about $75 per trade. This trader has acquired a well-disciplined trading mindset that he can recover these 3 losses with just 1 trade. If you reach $25 on your 4th trade, to target ratio 1 to 4 or ratio 1 to 5, you have already recovered the 3 losses. So I'm going to show you the practical illustration how this profitable trader at the profitability stage behaves in the market. Right now, this trader is only risking $25. This is the first trade that he is executing in the market. Number 1, unfortunately, this trader lost his account. It doesn't matter the losses. After losing a setup, this trader will go back to the chart and analyze the market and try to learn from his mistakes. What happened in the market? What did I do wrong? What went wrong? At the profitability stage, which is now a profitable trader, will also execute another position whenever his strategy tells him to execute again, and he will still maintain the same discipline by risking another $25 on this trade. Before he executes this trade, he already prepared his mind that whatever happens at the end of this trade, he will be responsible for it. Whether the trade goes in his favor or against him, he will be responsible for the trade. So, and let's see what happens. Fortunately, the trade goes in his favor. Boom! Imagine this trader is risking 22 pips as his stop loss. Let's put it here. He's risking 22 pips. That is about $25, and the loss size is going to use his 0.11 loss size, and to target how many? That is ratio 1 to 4. Imagine ratio 1 to 4 is going to be $100. Trader at the profitability stage, they don't break their rules. They are disciplined, they are patient, they understand that trading is a game of profitability. They can lose and they can make money. They see their trading as a business. They treat it with a well-structured plan and they follow their plan. They don't break their plan because of 3 or 5 losses in a row. They maintain their discipline and they structure their trading account in a way that they can keep on trading until the odds are in their favor. These are the features, these are the characteristics of profitable trader at the profitability stage. If this video has blessed you in one way or the other, and you want to be part of our free signals on Telegram, where we give out profitable signals to our trading community every week, you can click the link below this video description and it will take you to our Telegram community. And don't forget to click the like, subscribe, and turn on the notification button so that you can get notification when we upload another exclusive video tutorial.